Hello. In our Take this quarter, we're recommending you take action to secure your future project pipeline as the market gets back on track. Our market update report gives you insight from across the industry. In our latest report, the UK economy grew at its fastest rate, with November seeing the GDP back to pre-pandemic levels. I'm sure that if the start of your year has been as busy as ours, you'll have seen the number of new orders increasing as confidence come back into the market, particularly in the commercial sector. Construction has seen its fastest growth in 6 months, and although we're seeing fluctuations in materials and supply prices, and particularly energy, an increase in new orders across the industry is showing a really positive pipeline. In our latest report, you can dig into the detail and read it on the microsite as seen on your screen now. Mike and Ange will now take you through some of the details that you can see.
The UK construction sector grew at its fastest rate in 6 months, and this tells us the industry is moving and projects are forging ahead. This growth and activity brings increased tender opportunities to the supply chain as contractors look to fill their order books for 2023 and 24.
We saw material price inflation soften towards the end of last year as supply chain issues eased, although the level of demand across the industry remains strong. So although construction vacancies have dipped recently, improving demand and growth in activity suggests labour resource requirements will remain strong in 2022. We're advising caution, as although data suggests we've seen the peak of price increases from the lack of supply caused by the pandemic, energy price rises are likely to impact material prices in the near to medium term.
Looking at our latest tender price indicator, it shows that inflation is expected to continue to rise until at least 2025, with strong inflationary pressures set to be experienced this year, pushing up material prices.
But what are we seeing on the ground? We saw significant fluctuations in shipping and logistics prices towards the end of 2021, and with delays and volatile prices looking to continue into 2022, these challenges are set to remain for the medium term. However, we've seen the cost of transporting dry materials decrease since its peak in October, indicating the bottleneck is set to loosen towards the end of this year.
Raw materials and component costs continue to see price increases, which coupled with the cost of labour are driving up tender prices. To mitigate against these price increases, ensure early and honest communication with the supply chain and maintain competitive tension.
So, we're seeing strong evidence of inflationary pressures filtering through into both materials and supply pricing. This is influencing the supply chain's appetite for taking on price risk, particularly on large-scale projects with long project durations. To navigate these pressures, we recommend that you have skilled procurement with detailed analysis of risks and opportunities, supported by up-to-date live cost benchmarking. As we look ahead to 2022 and beyond, we're seeing the market back on track as growth returns.
If you want to find out the details behind the headlines, read about it in the full report on our Market Intelligence website. Follow our channels to keep up to date or get in touch to speak to one of our market experts today.